In this video, we will talk about the elements of statements of financial position, or the SFP. But before we start, try to answer the following questions. What do you call to the resources owned by the entity that are expected to yield benefits in the future? A. Assets, B. Liability, C. Equity, D. Revenue. The correct answer is A. Assets. Assets are entities' resources that are expected to yield benefits in the future. Another question. What are the obligations from past events which are payable to another individual or entity and will result in an outflow of entity's resources? A. Equity, B. Liabilities, C. Expenses, D. Revenue. The correct answer is B. Liabilities. Liabilities are obligations from past events which are payable to another individual or entity and will result in an outflow of entity's resources. Next question. What is the residual interest of an entity that remains after deducting its liabilities? A. Equity, B. Assets, C. Expenses, D. Revenue. The correct answer is A. Equity. An equity is the residual interest of an entity that remains after deducting its liabilities. Did you answer the 3 questions correctly? Elements of Statement of Financial Possessions, or SFP. These are assets, liabilities, and owner's equity. Assets. These are the resources or anything with value that are owned and controlled by the business and from which the benefits are expected to be gained. Examples are buildings, cars and other types of vehicles, cash and cash equivalents, inventory, equipments and machineries, furniture and fixtures, and supplies. There are 2 types of assets, the current and non-current assets. Current asset examples are cash and cash equivalents. These include the bills and coins or the cash on hand, and the cash in bank, and the working and operating funds. Marketable securities and money market holdings, commercial papers are considered cash equivalents because they are liquid assets. Receivable accounts such as accounts receivables, notes receivables, interest receivables, and other receivables such as from loans, rent, sales of non-current assets, and many more. Inventories or goods that are intended for sale. There are different types of inventories such as raw material inventory, work in progress inventory, and finished good inventory. Example of finished good inventory is the chair sold by a furniture store, while the unpainted and unvarnished chair sold by a furniture manufacturing is an example of work in progress inventory. The nails and the bolts and nuts, the plastic and the wood are examples of raw materials inventory. Another current assets are supplies. These includes folders, papers, pens, and many more. These are materials or supplies to be consumed by the business. Prepaid accounts. These are expenses in which the payments are made in advance, such as prepaid rent for the office building. Payment was made in advance and to be consumed on the succeeding months. Financial assets. These arise from contractual agreement or ownership claim, either debt or equity instrument of another entity. Now, let's define current assets. Current assets are assets which can be converted easily into cash or consumed, used, or exhausted within a short period of time, usually within one accounting period or 1 year. Now, let's proceed to the non-current assets. Non-current assets are properties, plant, and equipment. Examples are land and buildings, cars, machineries and equipments, furniture and fixtures, and improvements. Another non-current assets are intangible assets such as brand names, patents, and copyright. Investment properties are long-lived assets like real estate properties. The intention is to lease out or for future resale. Example, if the entity acquire a building with an intention to use it for their normal operation like production, this will be treated as property, plant, and equipment. But if the company acquired the same property with an intention to earn an income by renting it out, then it is called investment properties. Biological assets such as trees or plantations and animals. The biological assets is defined as any living plants and animals for breeding or for resale. With those examples, non-current assets can be defined as any properties which have a useful life of more than 1 year. It is a long-term investment of the entity that exceeds an accounting